Who are the panelists? Who are the panelists? Who is the moderator? Of course.
Satin sir, we panel
Oh, you made my day, sir.
ശരിക്കും പറഞ്ഞാണ് കേട്ടോ.
ആക്കിയതല്ലേ.
One minute to go. One more minute to go.
Okay. It doesn't matter. Okay.
So yes, good evening, friends. I think we'll get going. Welcome to this special panel discussion on a topic of contemporary relevance. Before we start the formal proceedings, may I request each one of you to close your eyes and pray to God Almighty so that all good things happen to all of us. Thank you and welcome back. Once again, a warm good evening to each one of you. I can see a galaxy of past presidents of Kerala Management Association sitting here. Of course, two of the panelists today are past presidents. We have the program committee as a past president. In addition to that, we have Mr. A.K. Nair, who is sitting here. We have Rajmohan Nair, who is sitting here. And of course, the panelists, we will see them later. Good evening to each one of you. And good to see that we have a very good attendance today already. And that shows the attraction which people are seeing in the panelists and the topic, of course, which is very relevant. Very difficult to plan anything actually as far as events are concerned, whether it is personal or official. Of course, KMA programs also have their own difficulties. In fact, the KMA office is closed due to the pandemic because one of our senior officers got positive and we had to sanitize and close for a couple of days. But still, we are going, and that is what the real spirit of mankind is all about, irrespective of whatever is negative going around us. We still keep going, and thanks to the online platforms, KMA is also pulling on in these new normal situations. Well, to just give you a brief on what all we did since our launch this year, we are maintaining a very steady momentum, continuously trying to engage our members in a slew of programs week after week. As you know, we had our inaugural event in November with the Chief Secretary of Kerala coming in to set the tone. We also saw the Chairman of Life Insurance Corporation of India, Mr. M.R. Kumar, addressing us on the same day, receiving the top recognition from KMA, the Management Leadership Award 2020. Thereafter, we have had 7 leader talk sessions, the lecture sessions till now with eminent leaders like Mr. Naresh Kumar Pinisetti, Dr. Santosh Rangadekar, Dr. Shivarama Prasad, Dr. Vinod Chandran, Dr. Sandeep Krishnan, our brand new respectful Mayor Advocate M. Anil Kumar, and the former diplomat, Mr. Venu Rajamani, IFS retired. We also had the KMA Women Managers Forum, organizing a panel discussion with a very decorated panel of speakers, leading a discussion on the topic, glass ceilings for women leaders, a myth or a reality, as the first panel discussion of the year. And thereafter, we've had a masterclass on digital marketing led by a domain expert from Chennai, Ms. Aarti Srinath, again from the Women Managers Forum. We had the second masterclass of the year last week by Professor Dr. Venkatraman, the chairperson of the Kochi chapter of IIM Kozhikode, on a topic of very relevance, that is professional development transition to the top. Another feature of this year till now were the 3 StartCon sessions, an exclusively conceived panel discussion forum by our program committee chair, past president. One with Mr. Sujit Bhaskaran of Gigsboard India and Ms. Fauzi Nizam of Cutie Pie Cakes. Second one with Mr. Joy Sebastian, the recent newsmaker nominee, who founded the online conferencing solution vConsole, and Mr. George Sakria, who founded X Travel Money. And the last one recently with Mr. John Matthew, co-founder and CEO of Riafi Technologies Private Limited, and Mr. Gis George, co-founder and chairman of Transite Systems Private Limited. We've also seen the new recreated KMA News magazine released consecutively for the last 2 months, and the next issue is just about to be released. I'm sure all of you have seen it. If anyone has not seen it here or received the print version, please contact KMA office to get your address included in the mailing list. And of course, write back to the editor to keep us motivated, at the same time help us make the magazine even better. In addition to all these panel discussions in the past 2 months with our own in-house experts and some of the industry stalwarts, we had conducted first one on the statutory updates for business in COVID times, which included the main changes. Those were announced by the central and state governments on various statutory compliances. And the second one on the concerns people had on the data privacy issues while using the popular mobile app WhatsApp. The topic was called WhatsApp at WhatsApp. Today, we have the third of such panel discussions of contemporary topic of relevance, this time on the brand new budget of our country, the Union Budget 2021. A historic budget indeed, presented in the backdrop of a never-before pandemic of our generations. Our Finance Minister, Madam Nirmala, has woven the budget around some of the terms as far as industry and business are concerned, like utilizing global supply chains, possessing core competence, employing cutting-edge technology, and kind of things. The first ever digitally presented budget came on somewhat expected lines, without much soaps for the salaried class, but many bouquets out of nowhere for the states heading for election soon. And we too in Kerala were lucky to see a plethora of schemes being doled out in the name, calling out as Kerala schemes. Well, to dissect and explain to the KMA fraternity the various features of this populist yet adventurous budget, we have an experts panel from our own fold. Mr. Vivek Krishna Govind, the omnipresent KMA face on TV channels, the past president and senior partner of Varma & Varma Chartered Accountants as the moderator. And we have a senior investment strategist, Mr. Professor V.K. Vijay Kumar of Geojit Financial Services, and a person close to KMA and all of us. And of course, Mr. V. Satyanarayanan, another senior chartered accountant, another very senior past president of KMA, and senior partner at Varma & Varma Chartered Accountants. And with them, of course, we have our vibrant honorary secretary, another accomplished chartered accountant, to add value to the panel, Jomon George, Chief Executive Partner of JVR Associates. On behalf of the Management Committee at KMA and all present here, may welcome this elite panel of our esteemed friends to this session of KMA. I also extend my hearty welcome to all the past presidents whom I have mentioned earlier itself. I can't see others here on the screen. Of course, Senior Vice President Nirmala, Vice President A. Balakrishnan, Executive Director of KMA Jojo, members of the Managing Committee who are present otherwise on the screen of the stream, Executive Committee, Managing Committee, all members of KMA, other local management associations, student members, members of the media, and all invited guests to this useful panel discussion. Now let me invite our program committee chair and past president, Mr. S.R. Nair, to say a few words about the session today and to introduce our panelists of the day for those who do not know them fully or closely yet, and to initiate the discussion by handing over the proceedings to the moderator. Over to you, sir.
Thank you, President Madhav, my dear panelists and ladies and gentlemen. Actually, my position is a little redundant one because Vivek is the one who is actually going to lead the panel. Simply by virtue of the fact that I am the head of the program committee, so I have been chartered into this. I'm sure the numbers have hit about 167, 180. I'm sure at this rate, we will go beyond 200 people listening to this wonderful elite panel of Professor Vijay Kumar, Mr. V. Satyanarayan and Vivek Govind. It is only the last week that I myself and Vivek had actually chaired one of those channels where they were asking us to what will happen in the budget. And I said she would be speaking for 2.5 hours, and Vivek said she would speak for 1.5 hours, and eventually she spoke for 2 hours. So she went into the median, and both of us, whatever we have predicted, actually had come through. There wasn't much of changes, as President Madhav had said. Budget was in the expected lines. I also have cherished that 1 hour 20 minutes that I had spent with Professor Vijay Kumar interviewing. I run a small interview called Plus Minus Show, and Professor was there with me about 2 weeks back, and cherished the moments of that 120 minutes that I had spent with you, sir. Now, but the relevance of the budget year actually had been coming down, because between budget, many things happened. In fact, Prime Minister Modi the other week said that actually last year we have had 3 budgets actually. So one budget and 2 mini budgets. So these budgets keep happening, and every time we may not be having time and energy and efforts to dissect that. But this budget definitely need a dissection, because this is one of the more, as President was telling, the most relevant budgets after this pandemic. So I think it really is significant, and we have a wonderful panelist. And let me introduce a panelist before I just move away. Professor Vijay Kumar, Professor Dr. Vijay Kumar, an economist, teaching economics under Calicut University. And after his superannuation, he had been working as a strategic consultant, and he has been everywhere as far as economy is concerned. One face that we can't miss from any channels on the TV. So there were instances that he used to actually go from channel to channel to channel to channel, and also writing in Money Control and many other periodicals and organization. Professor Vijay Kumar, a very hearty welcome to you to this panel. We are seriously looking forward to hearing from your views. And of course, Satyanarayanan, our former KMA president and a very senior partner, one of the senior most partners in Burma and Burma. And I'm sure we will be hearing from him about the tax announcements, and he will be able to tell us where is what lying in as far as tax is concerned. Satyan, a great welcome to you. And our moderator Vivek Krishna Govind. Vivek is, like I used to say, there was a time when I was a secretary to Mr. A.K. Nair during his time in Ernakulam. He was there in all organizations. Now, AK has actually gone back to Trivandrum, and to replace AK, we have Vivek. You name an organization in Kerala, Vivek is actually on the managing council of that organization. And plus, he's hoping from channel to channel, as far as, but the one good thing about him is a very pleasant-faced and very, very positive type of person. So wherever he is creating a lot of fan following. And Mr. Vivek Krishna Govind, of course, will be doing doing the moderation. And I'm very sure maybe by the end, our one and only inimicable Jomon George, he may be actually, while doing his the function of this, will also be making his comments about the budget. So without much ado, I would hand it over to Vivek. All yours, Vivek. Please go ahead.
Thank you. Thank you, sir. President Madhav, past President SR, Honorary Secretary Jomonji, and most distinguished dignitaries. It gives me immense pleasure and pride to be here this evening to moderate a wonderful panel. Two people who are very, very close to me and close to many of us here, who are absolute experts in their respective fields and gurus to most of us present here. We have Vijay Kumar sir and Satyan sir, and I'm sure that we will have an extremely interesting and engrossing session where very, very different perspectives are going to come out. There's no doubt about that. And over the past 2-3 years, I've had the opportunity of interacting with both our panelists on various aspects about the budget, and I'm sure that the kind of response, I think probably the at the shortest notice to have so many participants, it just simply goes to show the quality of both our eminent speakers who are going to be speaking to us on the topic, and both on the macro side as well as the direct and indirect tax. There are several very, very interesting proposals which have come up, and the finance minister promised us a couple of days before the budget that this would be a never before budget for never before times. And to that extent, I'm sure we will all agree that she has delivered a document and a path following the 6 pillars, wherein she's shown us how, or the manner in which the economy is going to be revived. And as SR rightly said, we are also expecting probably a few more mini budgets where there will be still more proposals. And over the last couple of days, in fact, even after the budget, there have already been some proposals which are coming along, both especially on the infrastructure side and healthcare side. And I'm sure that over the next few days, we will continue to hear more about some of these numbers. Some large numbers were announced during the budget as allocations, and the fine print, once we study that further, we are seeing that there are more, there is a lot more to it than what we heard in her speech. Especially on the taxation front, it seemed like there were hardly any changes. When we heard the speech, it seemed like it's all very simple. Tax rates have not been tampered with, and immediately after the budget, some of us, we were sitting and giving our immediate feedback to our friends in the media and telling them that it's a good thing, not much has been done, there's hardly any tinkering done, etc. But thereafter, by evening, many of us had to change our initial thoughts on that. And I'm sure that during the talk by Satyan sir, he will cover some of the important changes which have happened in both the direct and indirect taxes side. And on a macro front, again, this is more of a vision document, and the whole supply side of economics is the theory rather than immediate benefit. So there are no direct cash transfers, etc. Instead, there is a whole perspective on how jobs can be created, how infrastructure can be built up, and various avenues in which money is going to come in, and disinvestment, privatization, a word which was hitherto not used by any of the finance ministers. We heard that for the first time. We heard about how land is going to be monetized. So very many interesting proposals are there, and finally it's all going to be in the implementation of the budget. That is where we are going to really see how much of this will translate into real collections, as well as the expenditure side, which is finally, end of the day, that's all a budget is. When you look at it, it's income and expenditure. And I'm sure that in the next 20-25 minutes, when we hear Vijay Kumar sir, I'm sure he will completely change the way most of us have seen, and most of us have applied our minds on the budget a certain way. He is going to completely transform our perspective on it. He does that all the time, and we are really looking forward to listening to you. Over to you, sir.
Please unmute. Yeah, go ahead, sir.
Thank you, Vivek. Am I audible?
Yes.
Okay. Good evening, ladies and gentlemen. I'm very glad, indeed, delighted to be with all of you, even though virtually. It is a great honor to address an elite gathering like this. Thank you for the honor. We have limited time, therefore, let me straight away get into the topic. Mr. Madhav described this budget as a historic budget. I agree with him completely. A budget has to be assessed. Every budget has to be assessed in the context in which it is presented. How the finance minister responds to the context and the emerging scenario is hugely important. Budgets will be described as mediocre, good, great, and historic, depending on how the finance ministers respond to the given situation. Manmohan Singh's 1991 budget is often referred to as a historic budget, and rightly so, because Manmohan Singh rightly responded to the balance of payments crisis of 1991 and initiated liberalization reforms which completely transformed the Indian economy. So after 1991, in the next 29 years, India has been the second fastest growing economy in the world. Our GDP multiplied more than 10 times. And now, if you look at the stock market has multiplied more than 50 times from 1991. We will come to that later because there are some interesting insights in that. So how the finance minister responds is what is significant. What was the context in which Nirmala Sitharaman presented her budget? Well, I'm not reeling out the figures because all of us are familiar with the figures. In an economy contracted by 23.9% in the first quarter of this financial year, and that was the worst contraction among the large economies of the world. This year, we are likely to end the financial year with a GDP contraction of around 7.7%. Fiscal deficit for the year is an alarming 9.5% of the GDP. And fiscal deficit of the year in the States It is north of 14%, which is certainly no room for comfort. Also, debt to GDP, even though it has not gone out of control in these very difficult times, debt to GDP of 90% for a developing economy, an emerging economy, it's not a very comfortable level. But on the positive side, in the last a few months, the economy has been recovering much better than most optimists expected. If you go by the high frequency indicators, first quarter GDP, second quarter GDP are all history. What is more important is what the high frequency data tell us. High frequency indicators tell us about the GDP growth, corporate growth, tax revenue growth for the coming quarters. And if you look at these high frequency indicators like electricity consumption, e-way bills, GST collections, and sales of very, very important economically crucial products like steel, cement, automobiles, there is really a K-shaped, V-shaped recovery. Now there is a debate among economists whether this is a V-shaped economy, K-shaped economy recovery, or a L-shaped, W-shaped. Almost all the letters in the alphabet have been exhausted to describe. Of course, for the macro economy, certainly it's a V-shaped economy. But if you look at the different segments of the economy, certainly it is not K-shaped, because the MSME segment is in severe pain. And that is a very crucial segment of the economy. So it may be more K rather than V, but from the GDP perspective, from the macro perspective, it is certainly a V-shaped recovery. We are likely to move into the next year, financial year FY22, the GDP growth, not claimed by the government of India, but projected by the IMF, is 11.5. I'm a person who believes that the 11% GDP projection and a 14.4% nominal GDP growth projection for next year is an underestimate. Actually, we can move much higher than that. In fact, in a town hall discussion on that, the revenue secretary, the finance secretary also were asked about this. Your revenue projections are a little bit unrealistic. And the answer that they gave was, we prepared these figures in November. And in November, the corporate results were not as impressive as they are now. So we completely agree with that the actual revenue collections will be much more than what is projected. I will come to that again later on, depending upon the availability of time. So 21-22, India will be the fastest growing large economy in the world. Beyond that, we will be growing by 6.8% for the year after that. So the economic momentum is very strong. And what is required right now is the continuation of the momentum. We have to continue the economic momentum, because all of us know that the answer to most economic problems that India faces, the most important answer will come from GDP growth. Of course, we have to make growth more inclusive. We have to sustain growth. We have to make it sustainable, as inclusive as possible. The government has a role. Public action should be there. But for everything, government needs revenue. Revenue buoyancy is directly correlated with economic growth. Growth is the best anti-poverty program. And what is rightly needed now is sustaining this growth momentum that we have in the economy, and if possible, accelerate that growth. Finance Minister Nirmala Sitharaman has given us a document precisely for that. Precisely for that. That's why it is called the historic. What I like most in this budget is its open declaration of privatization. As Vivek rightly said, it's for the first time that an Indian finance minister has mustered the courage to say that we are going to privatize. Earlier, for the first time, Arun Jaitley in one of his speeches said that we are pro-business. No finance minister before him dared to say that we are pro-business, because in India, there is anti-diluvian thinking that if you are pro-business, you are anti-people. In Kerala, more so. even though things are changing now. Therefore, the thrust to privatization is what is most interesting in this budget. The government has unequivocally, categorically stated that the government's presence will be there only in strategic areas, some already declared strategic areas, 4 declared strategic areas, with a minimum presence of 1 company and a maximum of 4. The rest will be privatized. And in non-strategic areas, it will be comprehensive, complete privatization. To what extent we will succeed in delivering this, the implementation part, that of course is an area of concern to all of us, but the intent has been made very, very clear. Many public sector undertakings, we should have done it much, much earlier, but then in a noisy democracy like that of our country, where politics, good politics is becoming bad economics, privatization is happening only very lately. We had, if I go by the latest CAG report on the PSUs in India, we have 184 central public sector undertakings which have accumulated losses of 1.4 lakh crores. 1.4 lakh crores. And bulk of the profits come from 3 segments: oil, energy, and coal. Oil, power, and coal. So why should we have a large number of companies? Why should we have, even now, a Scooters India manufacturing Vikram scooters, that the annual production is less than the weekly production of Bajaj Auto or Piaggio, for instance. So we need to privatize, and that has been made very clear in the budget. Actually, we have a large number of success stories about which many people are not aware of. I was having a discussion with a left friend of mine, highly left oriented, but he's running his own business. When it comes to his own business, he is very rightist, but then in political thinking, very, very leftist. So I told him about the success story of Hindustan Zinc, and he was shocked by that. When the government privatized Hindustan Zinc, they sold 45% of the equity. What they got was 769 crores from privatization. But the government retained 30% of the equity. And the market value of the 30% equity of Hindustan Zinc, which the government holds now, is 30,000 crores. Some of you will find it difficult to believe. 30,000 crores. Because the private company which bid Hindustan Zinc injected huge amount of money in Hindustan Zinc, introduced excellent technological transformation, and now it is the second largest producer of zinc and lead in the world, and one of the largest producers of silver in the world. Plus, government got 15,000 crores, 15,000, 15,000 crores as dividend during the last 17 years from Hindustan Zinc. Had it been with the government, it would have become another KSRTC. So we should have, my own conviction is we should have done it much, much earlier, but better late than never. So this is what I like most in the budget. The second very positive thing is the focus on capital expenditure. I'm not happy with the fiscal deficit. I will come to that later. There were other years also. In the Pranab Mukherjee also had presented a budget with a massive stimulus, but major part of the fiscal stimulus was revenue expenditure, revenue stimulus, and not the fiscal stimulus, but I mean capital expenditure. But then this time 5.54 lakh crores is to be spent on capital expenditure. Already the government has declared the national infrastructure pipeline, where more than 7,400 projects have already been chosen. And 111 crores of rupees, 111 lakh crores of rupees are to be spent in the next 5 years, from 2020 to 2025, on this infrastructure projects, which can transform the infrastructure of the Indian economy, apart from generating multiplier impact of income generation as well as employment generation. So this is the second area which is highly praiseworthy. Because there are many other points. I'm not transgressing into the areas of my friends Satya and Vivek, but then I have to tell one thing. I'm not going to talk to you about taxation. They have a lot of expertise in that area. But I would appreciate the finance minister in not doing what she did not do. I appreciate her for doing what she did, but I appreciate her for not doing what she did not do. Let me explain this. Actually, just before the budget, when the finance minister was soliciting expert opinion from different people with expertise, a large number of people, I was surprised, some even some right-wing economists, pro-business, pro-industry, pro-investment, pro-entrepreneur economists, even some of them advised the finance minister to tax the capital market because the capital market is doing exceedingly well. So increase STT, increase the long-term capital gains tax, bring in a wealth tax for the super rich, as though the tax rates are very low now. Bring in a COVID tax at least for 1 year. Lot of advice. And many people would have been very happy had she increased securities transaction tax and increased the long-term capital gains tax, because many people will be happy when the capital market is taxed. Many reasons for that. But instead of accepting those advice, the finance minister did the right thing in rejecting those advice. Not only rejecting that advice, her focus is on utilizing the buoyancy in the capital market to make disinvestment and make the privatization work. If privatization is to work, if stocks are to be sold, and if stocks are to be accepted in the market by investors, well, the market has to remain buoyant. If you remove the good sentiments in the market by increasing the tax, well, the sentiments will be impacted. That's why I said I commend Nirmala Sitharaman for not doing what she did not do. That was very good. Margaret Thatcher started implementing privatization in 1979. She went the whole hog in 1983, assisted by Keith Joseph, who played a very stellar role in privatization in the UK, even though Peter Drucker, the management guru, coined privatization more than 50 years ago. In India, we are doing that now. And Nirmala Sitharaman will be playing the role of Keith Joseph in supporting Modi's privatization drive. There are nothing is an unmixed blessing. I'm a little bit concerned about certain things in the budget, particularly the fiscal deficit part. The fiscal deficit is 9.5% of the GDP for this fiscal year. It is way ahead of most expectations. Nobody projected a fiscal deficit of 9.5%. The worst projection, I think, was around 8%. And even for the coming year, the fiscal deficit is projected at 6.8%. But we have to appreciate the fact that this 9.5% fiscal deficit is actually a very transparent fiscal deficit. It's a very transparent fiscal deficit. A transparent fiscal deficit which has been, oh, something happened. Am I audible? Any technical issue?
No, sir. You're audible, sir.
Okay. So this 9.5% fiscal deficit is actually a very transparent fiscal deficit. The most transparent deficit accounting in my memory, because in all the previous budgets, including some of the dream budgets that we had, including Chidambaram's 97 dream budget, there was some accounting gimmicks where the Food Corporation of India's borrowings were not treated as part of deficit. It has to be treated as part of deficit. food subsidy has to be treated as part of deficit. Therefore, this transparent accounting is something that I appreciate very much. But then 9.5% fiscal deficit and 6.8% for the coming year are on the higher side. Why I am concerned about that is, with such high fiscal deficit, inflation will raise its head sometime. We do not know when. And when the inflation starts raising its hydra head, then the RBI will be forced to raise the rates. One factor which is supporting the economic growth in India right now, the high growth in India right now, the major tailwind for economic growth in India right now is the historically low interest rate. You are getting a housing loan for 6.9%. You get an automobile loan at the lowest rates in the last 25 years. So that is why these segments are doing exceedingly well. So if the fiscal deficit continues to be high and inflation starts coming back, then the RBI will be forced to raise the rates, and the economic momentum that we are having right now might be gone. That is an area of concern which I am sharing with you right now. But then the finance minister has clearly chalked out a fiscal consolidation glide path in which the fiscal deficit will be brought down to 4.5% by 2025. Let's hope she succeeds in doing that. And again, one point which I'm sure all of you will agree with me on this. Our projections, documents were all very good in previous years also, in the past also. But the problem is sometimes we fail in the execution part. In the execution part, there can be unexpected problems, opposition from the opposition, and opposition from trade unions. We know the Balco privatization story. Sometimes the privatization which can be done in 3 months or 4 months will take years together. So how the government delivers on the execution part remains to be seen. Otherwise, this is a very historic budget. I'm sure that when the history of Indian economy is written, let us say 20 years from now, by which time India will be the third largest economy in the world and an economic powerhouse. This document, this budget of Nirmala Sitharaman, along with Manmohan Singh's 1991 historic budget, would be described as the transformative documents which transform the Indian economy. Thank you very much.
Thank you, sir. As expected, Vijay Kumar sir, in his very, very inimitable style, has given all of us a really good perspective from a macro perspective, as well as added his own 2 bits in every aspect. And I'm sure all our delegates here will have a lot of questions. Already I'm seeing 1 or 2 queries which are coming in. I request all the delegates here, whatever your queries connected to the economic side of it, the macro side of it, please pen down your thoughts in the chat section, and we'll take it up during the Q&A. Next, we move on to the discussion on the taxation reforms, and I would invite Satyan sir to kindly talk to us about what is it that we need to understand, and what from a common man's perspective, how do we decipher the taxation reforms which have been proposed, sir?
Thank you, moderator, my partner Vivek Krishna Govind. I'm very glad to be a panelist when you are the moderator. Thank you, Vivek. Thank you, President of KMA, Mr. Madhav Chandran, and my fellow panelist, Vijay Kumar sir. You have, in your impeccable style, you have explained the impact of this budget in few words. Within about 20 minutes time, you have covered all significant aspects, sir. So you are continuing to be a good teacher for everybody who has got interested in economics. Thank you, SR, to be a program chair and giving me this opportunity to be back to this great organization where there are so many past presidents who are attending this, and all the members of my dear KMA. Good evening to you all. As Professor Vijay Kumar sir said, Finance Minister has not touched the taxation on long-term capital gains or on capital market, rightly so, because now the interest rates of bank interest rates are very low. So government wants this money, public money, to come to the capital market so that more companies can come for these IPOs and tap the capital market, where the Indian retail sector retail money, people have not started venturing into this stock market in a big way. So if a wrong signal is given that they are going to tax this capital market and they are not stable with their policies, probably it will send a wrong signal to the retail investors. Also, the stock market, this budget, they have covered a good lot of incentives for AIFs, that is alternate investment funds, and also foreign capital in the form of international financial centers, and big infrastructure bonds have all been around. So that the roadmap and the guidelines are very clear that they want investments to come to this India through capital market, and retail segment also to put money into the capital market than in bank deposits. So the finance minister has not touched the individual's tax rate. My job is to cover direct and indirect taxes in about 20-22 minutes time that I will do. So what I have been, the finance minister has not touched the capital, these slab rates, and she has not given any cess on this COVID cess. It is probably one reason, immediate reason of the stock market buoyancy, which you have seen when she was presenting the budget, and it closed around 2,300 up, which I think is unprecedented when any finance minister's budget is presenting. Last few years, we have seen the stock market coming down when any finance minister is presenting, but this time it went up because of all these positive things which she has done for the capital market and for the individuals to spend money. One thing and few specific aspects which of interest to all the members here, which I would like to cover, is one for the salaried. Let me touch upon what she has done for individuals first. For individuals, for salaried employees, there is a provision that this leave travel concession is tax-free. But the provision is that you have to undertake the travel. But during COVID time, that is especially in the financial year 2021, we cannot travel. So what do you do with the leave travel concession money that is received? So the government had issued a circular in the month of October that in this financial year, if you spend 3 times of the LTC that you get, for example, suppose I'm getting 30,000 rupees as LTC, 3 times of that is 90,000 rupees. Suppose I spent on purchasing items which are taxable to GST at the rate of 12%, then this LTC is not taxable. I should spend by 31/3/21. If I spend this much money on 12% GST items, then this LTC is not taxable. But it is by way of a board circular. So to give that provision a statutory recognition, they have included in this finance bill that in this financial year 2021, the rules will be issued to provide that LTC, how this LTC is not taxable and what all things we need to do. I'm sure whatever the board circular has been issued will come as a rule and it will be in place. The next item, which probably she has not mentioned when making the presentation in budget, is that Provident Fund, Employees Provident Fund and Voluntary Provident Fund contribution in a year in excess of rupees 2.5 lakhs from the side of the employee will be taxable. So suppose employee's contribution is 3 lakhs, but employer contribution is also 3 lakh, then employer's contribution of 3 lakh goes tax-free, whereas employee's contribution will be pegged at 2.5 and interest on the balance 50,000 rupees will be taxable. A rule will be issued how this has to be reckoned. So employees' mandatory provident fund and also voluntary provident fund, to the extent of employees' contribution exceeding 2.5 lakhs, interest on that becomes taxable. Of course, we will get ATC deduction on this provident fund contribution, but the interest that accrues on this becomes taxable. So there is no exemption on this. So it is roughly around a person having a salary of around 1,52,000 or 1,72,000 or 1,73,000 rupees and more will have a taxation incident. A person who is having a less than a salary of 1 lakh, less than 1.72 lakhs per annum, there's nothing to worry. But those who are getting salary excess of that can have a tax incident of interest accrued on PF will become taxable. That was not mentioned there. Unit-linked insurance premium is something which has been issued by the LIC and other institutions. It says that if any institution again is issuing an insurance premium on a policy which is more than 2.5 lakhs on a policy in a year, then that amount will not be allowed as a deduction. We cannot claim any exemption. The amount that we get back on its realization will be taxable as capital gain. Otherwise, any money that we get back from ULIPs were tax-free. So now it says, if the ULIP premium is more than 2.5 lakhs per annum, then it is not tax-free. You have to pay capital gains tax on it. It is not a normal income. You have to pay capital gains tax. So the indexation and all other benefits will apply. She said while making the presentation, budget presentation, that individuals having of 75 years and more and getting pension need not file the return of income. But there is a catch. If you see the fine print, the pensioner should have account only in the bank through which the pension is paid. Only one bank account. If the person is having two bank accounts, then it says the person has to file the return of income. If you can manage two bank accounts, a person of 75-year-old plus person, if he is able to manage two bank accounts, then jolly well let him file the return of income. But if he's having only one bank account through which this pension is received, it says you don't have to file the return, but the bank will deduct tax as if that is a full tax, not the tax on this pension or the tax on this interest, which normally at the 10%, etc. No, the full tax will be deducted as if the bank is assessing officer, and full tax will be deducted. So we'll have a very limited applicability, because I don't think there will be any individual in India will be having only one bank account. Probably you'll have one or two bank accounts. So very limited application on this. Another thing, now I'll come to the charitable trust. She has done in charitable trust and business areas, business assessees, what she has done is she has tried to overcome certain decisions of high courts and Supreme Courts. In charitable trust, we could have, as we know, a charitable trust can get corpus donation, which is tax-free. Any amount received as corpus donation is tax-free. Also, an organization, a charitable trust, getting loan and spending that loan money for charitable purpose could have claimed the application of out of the loan as an income application. This has been accepted by Supreme Court and various high courts. So this budget has overruled these two decisions, which says that any application out of the corpus funds or out of the loan received by the charitable institution will not be treated as an application. Instead, any money that is recouped to the trust, to the corpus trust, as also any money repaid to the financial institution which has given the loan, will be treated as an application, not application out of the corpus fund or out of the loan. Recouping the loan or recouping the corpus fund will be treated as an application. This is to overrule a certain high court decisions. Supreme Court had held that if for some reason I have spent more in 1 year, that charitable trust can set off the excess application to the subsequent year. This decision of the High Court has been overruled, which to say that in future, set off will not be allowed by a charitable institution. So charitable institutions has to necessarily spend in that year. If there is an excess application, that has to be foregone in the year of application. Small charitable trusts up to 1 crore gross receipts were treated as an exempt, especially hospitals and educational institutions. Up to 1 crore gross receipts were treated as exempt. The limit of 1 crore is low, so the finance minister has increased the limit of 1 crore to 5 crores. It's a welcome decision. A few items which of importance to on business community is that there has been some decisions which said that goodwill of a business, if I have acquired goodwill of a business by paying money and purchased goodwill of a business entity, then the goodwill is a depreciable asset. We can claim depreciation. It is an intangible asset, so the money that is paid is an asset which can be depreciated at the rate of 25%. So that decision of the high courts have been overruled by this amendment to say that goodwill is not a depreciable asset. But whenever we sell that asset, that goodwill, so at that time, the money that is paid can be reduced and only the excess money realized on its transfer will be taxable. So on goodwill, we will not get depreciation. Another item on which she has done a tinkering is with the tax audit limit. At present, the tax audit limit is any business entity having turnover more than 1 crore should have a tax audit done by a chartered accountant. Last year, she said that if you are doing the transactions through digitally, meaning 95% of the purchases or the expenses and income, if it is coming through digitally, that means cash transaction is only to the extent of 5%, then the limit of 1 crore can be increased to 5 crore. So tax audit limit will be only above 5 crores. But that 5 crore limit has now increased to 10 crores. So those assessees who are having 95% of their transactions through digitally, meaning either it can be through bank or cross or through this NEFT, etc., other than cash. Such assessees, the tax audit limit has now been increased to 10 crores. So if the transactions in cash is more than 5%, that means if 6% turnover is there, then the limit will be 1 crore. So if anybody having transactions more than 1 crore, and then they will have to get their accounts audited. To get over that, 95% should be on digital mode. Another one which she has done is there has been a tax planning device which do legally that if one partner wants to retire from a firm, a business firm, the businesses used to revalue their assets. And on the revalued portion, an amount is repaid or an asset is adjusted against the revalued amount, then there was no capital gain taxable in the hands of the firm. It was an accepted position. But this amendment, which has now been introduced, has overruled those decisions from this financial year, meaning from financial year 2021. It says that if an asset is taken over by a partner, by revaluing that asset, then on the revalued portion, the firm has to pay capital gains tax. This is again an amendment which has been brought in to get over the decisions of certain high courts. The employees' contribution and employers' contribution of Provident Fund and ESI had to be remitted to the government under PF law and ESI law within the due date. There was a dichotomy in the due date's definition. So employers' contribution and employees' contribution, some high court said both can be paid before the due date of filing the return and not due date of payment of PF and ESI. So this amendment has now been brought in to clarify that this PF contribution and ESI contribution should be paid within the due date prescribed under the respective statute, which is between the 15th of the next month. If it is paid on the 16th, then this amount, which is recovered from the employees and paid to the government, will not be allowed. employees' contribution will not be allowed, whereas employers' contribution will be allowed. Only employees' contribution will not be allowed. This again has been brought in to get over certain High Court decisions, which has been brought in by the Kerala High Court has ruled against the assessee, but some other High Courts had allowed in favor of the assessee. This amendment has been brought to overrule that. And very significant amendment which she has brought is in respect of tax deduction at source. The government's mechanism is to bring in more assessees to the tax net. So tax deduction at source is a good mechanism by which they can increase the tax payer base. So suppose I am a person in the business and my turnover in a year is more than 10 crores. What she has done is, I am a businessman, my turnover in a year is more than 10 crores. Suppose I am buying from A goods more than 50 lakhs in a year. Then from A, I must deduct tax at the rate of 0.1%. If Mr. A is not having PAN, then the rate gets increased to 5%. Otherwise, it is 0.1% of the purchases value which I have purchased from A. Last year, she had brought in a provision that when a person who is having a business turnover of more than 10 crores, suppose I am selling to a person goods worth more than 50 lakhs, I must collect tax at the rate of 0.1% from my customer. I must collect tax at source. That provision was there earlier. This year, she has increased my responsibility to deduct from my purchases also. So I should collect. So I am a trader. I buy goods worth 60 lakhs from A and sells it to B at 65 lakhs. So from A, I must deduct at the rate of 0.1% from A, and from B, to whom I have sold at 65 lakhs, I must collect at 0.1%. So if A is not having PAN, it should be 5%. If B is not having PAN, the rate gets increased to 0.5%. I can appreciate that if it was stopped with that. But she goes on to say that if A has not filed the return of income for the last 2 years, then it is double the rate, meaning it will be 10% or it will be 0.2%. If he has got PAN, it will be 0.2. If he is not having PAN, it will be 10%. So I, as a businessman, should know from all my purchase people, creditors from whom I am purchasing the goods, whether they have filed the return of income or not for the last 2 years. It is not enough that he filed for 1 year. For both the years, he should file the return of income. So this, she says that ease of doing business, but this I think is not a way to ease of doing business. And it will be very difficult for a person of a lower turnover, even 10 crores in a year. It's not a big amount. Less than 1 crore, about 75 lakhs in a month is not a big amount. Such a person should look into these type of transactions and then comply with these stringent provisions of this Income Tax Act. This is, I think, which she has brought in this year. Another provision which I now touch upon will be on real estate sector. So real estate sector, she has tried to do certain things, especially to bring employability, infrastructure development and the real estate sector. Government knows that these are areas where there can be a lot of employment. So to this real estate sector, what she has done is, she has given certain reliefs to real estate buyers. If they are their deductions which was allowed for housing loan, for affordable housing, the limit, the deduction would have ended as on 31/3/21. That she has increased to 31/3/22 also. So this momentum that is there for real estate sector, she wants to continue. Another thing is a beneficial provision which has been introduced for persons who are in real estate sector. Those who are in real estate sector, who are treating this real estate as their stock in trade. To them, if they are selling their product, their stocks, that is real estate items, at 20% less than the value fixed by the government for fixing the stamp value, then that difference, suppose I am selling for say 1 crore, the stamp value is 120. The difference 20 lakhs will not be treated as my income. But the stamp value is 30 lakhs means 130 means the difference is 30 lakhs. It is more than 20%. So that difference 30 lakhs will be treated as my income of the person who is selling the product. That is the real estate dealer. Similarly, that 30 lakhs will be treated as income in the hands of the person who is buying the real estate property. So earlier, the provision was only 10%. She has increased to 20%. It cannot exceed more than 20%. So the benefit that is given is to liquidate the real estate stock. For that, they have given, it was there earlier, the limit has only been increased from 110% to 120%. So, but the total limit, it is only for affordable houses. So the value of the residential unit should not be more than 2 crores. This is again only for residential. It cannot be used for sale of commercial property. It is beneficial provision given only for real estate, liquidation of real estate stock, for which the maximum value is only 2 crores. The consideration is more than 2 crore. This beneficial provision is not applicable. The last point which I would like to touch upon is certain things which he has done on faceless assessment provisions. She has the faceless assessment provision has been introduced, by which she has done away with the assessment procedures. It has been increased to CAT appeal at the first level. Now she has increased to tribunals also. The limit has been, that provision regarding faceless hearing have been given to tribunals also. We really don't know how it will work. Till CAT appeal, first appellate authority is an extension of the assessing authority, but the tribunal are judicial authorities. We really don't know how the facts can be really brought up before a ultimate fact-finding authority. High Court is not a fact-finding authority. So tribunal, if that is started with income tax, soon it can come to National Company Law Tribunal. And there are so many other tribunals where probably if it comes to E, so we really don't know how this provision will really get into actual implementation. We really have doubt. The professionals have really doubt how tribunals can really function. It is not personal hearing. It is on faceless means they will not call us for a hearing. We have to file the documents electronically. Once we file the documents electronically, some people sitting somewhere, anywhere in India will decide and we'll get an order. There is no opportunity for us to appear before the bench and present our case. After that, we have to go to High Court. Then High Court will say, did you not present it before the tribunal? Why this was not done? So this facility, really, we don't know whether this will be helpful for the assessees or whether this is only complicating the tax assessment. So really one tedious matter, and this faceless tribunal hearing is the two matters which we thought cannot really function go along with the ease of doing business. One welcome thing is that she has reduced time limit for which the assessments can be reopened. Earlier, the time limit was 4 years, or if there is a suppression, it was 6 years. So these 4 years and 6 years limit have been reduced to 3 years. So that is a very welcome movement. But if there is a suppression is more than 50 lakhs, then it can go up to 10 years, but for which there must be an asset should be recovered. Only for some disallowance of an expenditure, it cannot be done. But if an asset is recovered or an asset is identified, I have purchased a property where the value that is shown is less by more than 50 lakhs, then she can go back for 10 years. But if I have claimed an expenditure which they say is not right, they can do only for 3 years. So this is a very welcome move. So we were all having difficulty. We have to keep all our records intact for 6 years. Now it is restricted to 3 years. So that is a very welcome one. There are so many appellate forums that have been created. One, a dispute resolution committee. An authority of advance ruling was there. It was not functioning. There were a lot of cases pending. So they say that it's very difficult. It's not properly functioning. So that has been dismantled. Income tax settlement commission was also say it was not functioning properly. That has been reduced. So probably the government is thinking that these mechanisms should not come. So many litigation should not come to the courts level. It all should get settled at tribunals, at the department itself. So these are all very welcome. So many amendments have come in that line that so many disputes are trying to get settled. So it's a very welcome amendment which is proposed. So overall, I find that this amendment which has been proposed, there is no retrospective amendment. It is a very welcome decision which Finance Ministry is doing. Only thing is it is applicable, some provisions are applicable from this financial year for which we have not filed the return. But nothing is there which affects our returns which have already filed. So to that extent, it's a very welcome amendment proposals which have been made in this finance bill. So I thank the audience and for this patient hearing. I am very happy to take questions along with Professor Vijayuma. Thank you, President. Thank you, Moderator, and fellow panelists. Thank you.
Thank you. Thank you. Thank you so much, sir. With so much of clarity and depth, you have covered some of the important amendments. Many of these, our delegates would not have really understood the intent behind many of these amendments which have come, and it is very, very. I'm sure a lot of people are even right now thinking about what would be the impact on their businesses and on their personal taxation side. So what we'll now do in the next 10-12 minutes is quickly run through some of the questions. So if any of you delegates, if you have any more questions, kindly continue to write that in. To the extent possible, we'll take it during the discussion. If not, we assure you that all your queries will be answered by the delegates. We will, on a one-to-one basis, get back to all of you. So we'll start with the first question from our program committee chair. SR has asked Professor Vijay Kumar a very interesting question. The current dispensation has been anti-Nehru, but Nehru built up all these PSUs as part of his mixed economy theory. And now today, that is what is acting as the savior for the country. So what is your take on that? And he has also added a supplementary question, whether further any new PSUs need to be created so that a future Nirmala Sitharaman will be able to encash and monetize on the value of assets which are locked into these PSUs.
Very subtly, SR has asked that question.
Yeah.
Interesting question. Economic policies are the products of the circumstances, the context. We had in the 1950s, globally, a move towards nationalization. Even conservative governments nationalized industries, businesses. Whereas in 1980s, the tide turned and we had labor governments. In France, for instance, we started privatization. So these are two different historical contexts. In the 1950s, conservative governments nationalizing business, and in the 1980s, labor governments privatizing business. The 1950s was a time in India when Indian business, the corporate sector, did not have the resources, both financial and managerial, to invest in business in a big way. But right now in India, our companies, our corporate sector have the competence, the managerial competence, as well as the financial resources. Financial resources can easily be traced from the global financial markets, need not be confined to India. In the olden days, we could raise money only from the domestic savings of the economy. Now, if you have a current account deficit, actually 2% current account deficit means you are using 2% of your GDP as foreign money that is coming here for India's capital formation. So the historical contexts are different, right? And of course, whether we should be starting new, a very humorous question. SR is always like that. puts a humorous spin in very serious questions. Whether the new finance minister should be setting up PSUs for a future Nirmala Sitharaman to privatize. Well, my answer to that question is, globally now there is a consensus that it is none of government's business to be in business. I'm sure you will agree with you on that. Everyone will agree on that. So it is none of government's business to be in business. That can be done by the private sector, the entrepreneurs, we have, even in Kerala, we have people like Baiju, who is um, raising billions of dollars abroad and investing that money in business in India. So forget about new finance ministers setting up new companies for a future Nirmala Sitharaman to privatize. The government has better things to do.
Right, sir. Next, we have two questions, one from Eldos Isaac and another from Ms. Jyoti, both on when do you think our economy will hit the magical 5 trillion number, and whether with the kind of growth at this level and with the disinvestment proposals, etc., is 2025 realistic at this stage?
Certainly not. 2025, we are not going to be anywhere near that, because the pandemic has completely changed the equation completely. We will be reaching the pre-COVID GDP only by the end of this year. Pre-COVID GDP. So you cannot do a magic. As John Maynard Keynes famously said, in economics, there are no miracles, only consequences. So there is no miracle by which we can reach a 5 trillion GDP mark by 2025. If things go according to the plan, we might reach there. We will certainly reach there. When is an important question mark. We might reach there by 2027.
Thank you. Thank you. So next we'll pose a question to Satyan sir. This is from our managing committee member, Hemant Bahura. The budget encourages employees to become entrepreneurs, but any advice to senior employees with more taxable income as to where and how to invest strategically, and how do we plan tax in the long run?
Very interesting. So senior employees, see, there is a risk in any investment. So as finance minister is also looking at, the capital market will be an investment avenue where India, there is a growth story is there. Definitely India will grow. So capital market will be an area where we can invest, but there has to be a basket of investments. You cannot put all eggs in one basket. There has to be a stock and equity linked investment, and also a debt-based investment. Investing, if you are knowledgeable like Dr. Vijayama sir, we can do directly with the company, but otherwise through mutual fund will be the safest way to get invested. And while taking these investments, generally my advice would be to take through the safe position would be to take to Nifty based or Sensex based investments, where definitely the Sensex will go up. So over a period of time, we have a safety net in Sensex or Nifty-based mutual funds. And debt-based is also good to have a cushion so that a net is there. But the liquidity may be a problem. So we must have investments in fixed deposits also. Senior employees, depending upon their age profile, you should have a higher investment, higher debt component and FD component if you are 65 plus, and those who are 40 plus can afford to have more exposure to equity, because in long run there is a growth story. India will definitely shine. So if you want to participate in that growth trajectory, we must have an exposure to equity market. Thank you. I hope I am clear. If otherwise, I can take some supplementary questions.
Satya, may I add one point? If,
yes, yes, sir, always.
Those who do not have time or expertise in this area can come to Geojit. We'll be very glad to hold your hands.
In lighter vein, I have a question to Satyan sir. Mr. Bahura was asking about senior employees. Is your advice applicable to senior partners as well?
That is what I thought, 65 plus, because I am beginning 65. That's what I thought.
You shouldn't have revealed that.
Right, sir. So I'll come back to our queries. We have a question from Mr. Hari Kumar, again, our committee member, and he's the president of the Cochin Chamber. Arun Shourie, as Minister for Disinvestment, privatized 25 PSUs other than Hindustan Zinc, Bawalco, and some of the others. What is the position on the others? some of the units. Look at the companies like Jessop bought by Ruias. What is the fate of 15 hotels privatized? Mr. Harikumar heads a fairly large PSU, and so I think his question is also from that perspective, sir. So it'll be interesting to hear your view. Vijay Kumar, sir.
Harikumar, a relevant question. Every such privatization need not succeed. Everything need not succeed. Sometimes when the environment changes, a business will not succeed. To give an example, VSNL was privatized, and the VSNL was given to Tatas. Tatas could not turn it around because this environment completely changed, and we had mobile telephony coming in, and companies like Bharti Airtel and later Reliance Jio completely changed the situation. Therefore, VSNL did not succeed. Even if VSNL continued to be in the public sector, it would have collapsed. So there can be situations where some businesses will not succeed even after privatization. That is part of the game.
Right. So one more question to you, Vijay Kumar, sir, from Mr. Hemant Bahura. He says that you have rightly mentioned that strategy is good, but execution is very important. It said that culture eats strategy. Any advice on economic culture to successfully execute the good strategy?
Well, strategy, we have the right kind of strategy. Many people are now saying that last year we had a disinvestment target of 2.1 lakh crores, but we could not even achieve 20% of that. But last year was very much an exception to the rule. Because of the lockdown, nothing worked. The year before that, the government exceeded the target on privatization, if my memory serves me right. Therefore, of course, execution is always a challenge. We know what is happening to the agriculture reforms which was introduced by the government. So execution is a big problem. We will have to recognize that particular fact in India, because of the culture is a very important factor there. Not just culture, there are some political issues, there are some social issues. For instance, in China, if there is an opposition to something, they will nip the problem in the bud. Even student agitations were nipped in the bud, rather not in the bud, actually cold blood, right? So in India, we cannot do that. Therefore, there will be some delay. And that was what Dr. Raj Krishna meant when he said the Hindu growth rate because of the cultural issues there. I'm not going into details there. But then now I think there is a slowly emerging consensus in India. Look at the Kerala politicians, even the sons and daughters of the top political communist leaders in India, their children are in business, right? When I was in school in the 1960s and also in the early 1970s, the slogan that I have heard, Vivek was not born at that point of time, therefore he may not be remembering that. The slogan was Tata Birla Bourgeoisie, Ningal Nyangade Shatrukal. Tata Birla Bourgeoisie, Ningal Nyangade Shatrukal. Now the children of these leaders, actually in my area, in my village, where the slogan was shouted by a CPM leader, his grandchildren, two of them are now working in TCS, Tata Consultancy Services, right? So there is an emerging consensus that private business, we have to be pro-entrepreneur. But the problem is when the business grows, a private business, a small business grows, we say it is a corporate, and the corporate has to be opposed. Even now we are saying corporate, forgetting the fact that Serum Institute and Bharat Biotech, which are saving crores of lives, are two corporates. But then we are attacking the corporate. Therefore, we need balance on that. Old habits die hard. Culture also takes time to transform.
Thank you very much, sir. There was also a question on the budget allocation in the agriculture sector, but you briefly covered on the farmer protests, etc. So we're not getting into that for paucity of time. I think the time that has been allocated to us, we've come to the very fag end of it. And I must say that this has been a very interesting discussion. A lot of thoughts have been evoked. I'm sure a lot of queries have come up in the minds of many of our delegates. And, we'll, through the KMA platform, any of you have any further queries, we'd be happy to share that with our eminent speakers, and we can come back to you. So don't think that the session ends here, because a lot of further analysis and discussion is needed on this. So feel free to write to us at the KMA ID and give your feedback. That has also been posted on the chat box, and we'll be happy to continue this discussion. So with these words, let me also personally, on behalf of both the panelists present here, let me thank KMA for giving all of us this opportunity, and we continue to look forward to interact. Back to you, President.
Thank you, Vivek. Our secretary, another chartered accountant, is sitting there. I think he has 1 or 2 points to make before he gets into his usual, role of the secretary's vote of thanks. Jomon, would you like to add something? I can see that you're throbbing to say some points here as a chartered accountant, not as a secretary.
Thank you, President. Expert panelists, Dr. Vijay Kumar and Satyan sir. Again, as Vivek said, he's guru for me also. I was trained and learned my first lessons of accounting and taxation from Varma and Roma, of course, from the Chennai office, and grateful for all that. And the program chair who said who started saying that his namesake here, but your questions was very clear that you have gone into in-depth analysis of the budget, and you confined to give more time to the panelists and the moderator. That's really nice of you, and all of us who are still with us online. See, in lighter vein, a budget is defined as an orderly system to live beyond your means. That blended with what Dr. Vijay Kumar said, government has no business to be in business, is, according to me, Union Budget 2021. There are a lot of challenges, like the slogan was mission revival, and terms like pressing the reboot button, which is essentially required. And then Madam had a very tight situation where, on the one side, on health, the 6 pillars, as she mentioned, health, manufacturing, agriculture, reinvigorating, some very striking, reinvigorating the human capital. We say we have a demographic profile, but demographic dividend. I always say demographic capital, which has to be skilled and made productive. And then, of course, research and development. And lastly, minimum government and maximum governance. Living up to all that, I think the tough task has been to keep all that, raising resources. Tax collections, of course, on the indirect tax front, as Dr. Vijay Kumar mentioned, GST collections are increasing. There are green shoots everywhere. All indicators are positive. Capital market gave midday 2,300 points salute to the budget, and then came down. And still, it is looking very, very positive. Ideal for privatization. And when Vivek said monetizing land, or rather what is with the government, is that it is selling land. Not monetizing means you are selling and making money out of that, or alienating in some way so that the government's kitty is richer. So that was the way that she could proceed. That is the only way, probably. And then one complaint is that she didn't put cash into the pockets of the common man. But then instead, the infra push, the other initiatives which have been taken, of course, health, we have gone through, what may continue to go through for some more time. We need higher allocation. Defense, we have unfriendly neighbors. With all that, resource mobilization has been a challenge. So many of the assets are put on block. But then, targets could not be achieved. This year, there is a very ambitious target of 1.75 lakh crores. So altogether, a budget size of 34.83 lakh crores. And, the mixed responses. Anyway, that is what in total. And in on the tax side, I think it is more on streamlining the tax administration using technology, faceless assessment and things like that. And the good news with the capital market also cheered up was that there are no fresh levies when everyone is thinking of, which Dr. Vijay Kumar also did mention. So both the panelists in their own unique style. Dr. Vijay Kumar, we're not hearing for the first time the way he writes, and he captures the whole in 20 minutes to capture such a complex macro perspective of the budget is no easy task. Only you can do that. On behalf of all of us here, Dr. Vijay Kumar, once again, big thank you from KMA. And Satyan sir had a bigger task because most of the things are technical. So after a general session, to bring in the specifics on individuals, on trusts and all that. But as the tax expert that he is, any tax doubt I have, I still take the freedom of picking the phone or going to him and discussing with him, where very, very clearly explains how it is. And today it is another great expression of your expertise and, of course, your love for KMA, being a senior past president. Thank you so much, Satyan sir and my guru, for the wonderful session. And Vivek is become, the moderator emeritus I can say going forward, many of the programs and on macro or micro, whatever it is, and in his a very, very different style. He did a wonderful job. So once again, thank you, Vivek. And when we planned this at short notice, we had doubts as to whether we'll have people who would be really interested, whether we get the traction. But the turnout is really nice. Do we call it a turnout on a digital meeting? I don't know, but I think the participation and the same budget was also digital. But there is more than she reading it out from a notepad. Print is available everywhere. Of course, links were also given. That is also a new way of looking at it. So big thank you to all the participants, program committee chair, SR, president for mooting this idea, and the caption was coined between the president, myself, and Vivek that Union Budget 2021 dissected, and both the panelists really dissected it so very well, explained it so very well for all the participants. And to the 200 participants, I told the president that we are going to hit a double century, and that really happened and on a virtual meeting. So great evening and great learning. Thank you, everyone. And to the secretariat also, Jojo, Prajit, and all of them there, a big thank you. Stay safe, stay focused, stay determined. God bless you. Thank you.
You exceeded your role, Jomon. Actually, I wanted you to talk as a chartered accountant, and you went down with a vote of thanks. I wanted the crowd to be sitting here, attendance to be present here when I'm going to make some announcements. You have finished off in no time. I was giving you a chance to actually add to the panel suggestion. Let me, before people go off, let me just inform. We have a slew of.
You are at fault. You cheered me. And one more lighter note. There is a recent thing, a troll which is going around on LIC's privatization. LICയും കുറ്റം പറയേണ്ടതുണ്ട്. നേരത്തെ ഒരു പോളിസി എടുത്ത് വെക്കേണ്ടായിരുന്നു.
Old habits die hard. You are a vote of thanks, man. That's a problem. I forgot that. Sorry for that. Anyway, we have a series of activities coming up in KMA. Before everybody goes off, let me tell you that we have a leader talk session by Professor Dr. Anil Menon of SP Jain School of Global Management, Mumbai, coming up on 8th February. He is going to talk on the topic.
9th, it is 9th.
Sorry, it's 9th February, sir. Right. I'm stand corrected, program committee chair. He will dwell on a very serious topic, 7C model for businesses during the challenging times. A very relevant one for the current scenario. We also have another interesting program coming up from the women managers. 11th, immediately after the 9th, a conversation session on financial planning, when we will see Ms. Shaini Sebastian, CEO of Affluence Financial Services, chatting with Mr. Angur Maheshwari, CEO of Equirus Wealth. They'll be having a conversation on the topic, make your money work for you, a guide on financial planning, maybe an addendum to what Professor Vijay Kumar said just now as to how to get guides on financial planning. Then comes the big event, the Management Week celebrations headed by our past president, Raj Mohan Nair, which is going to start on 19th of February and goes on till 25th of February, a week-long activities, including a virtual solo run called the KMA Run on 20th and 21st February. The inaugural session is going to see a high-profile set of the dignitaries headed by our own IMA President and Vice Chairman, Managing Director of JK Paper Limited, Mr. Harshpati Singhania. Along with him will be the Director General of IMA, Rekha Sethi, and most probably a senior Kerala minister also will be there for the inauguration of the Management Week celebrations. That is going to be on 19th of February. We have a series of other activities in the ensuing days. 20th, 21st, we have the run. We have the Professor M.V. Piley Memorial Lecture going to be delivered by past IMA President and Group Executive President of Aditya Birla Management Corporation Private Limited, Mr. D. Shivakumar, very popular and eloquent speaker. He is going to be there for the Professor M.V. Piley Memorial Lecture on 24th. And we have the Student Management Convention, which was a big hit in the earlier years. It's going to be done, chaired by our Managing Committee member, Mr. Anil Verma. This is going to be a very, very superlative day, actually. We have Professor Subramaniam of Vyasa University coming up for the inaugural, along with our own Managing Committee member and Executive Director of Federal Bank, Ms. Shalini Warrior, addressing the students in the inaugural session. We have a panel discussion with leaders from various domains guiding the students. They are Atul Sharma, Neetu Bansal, Robin Tommy, guiding them on their career and prospects in the future. A keynote session, a well-awaited one by none other than Professor Dr. Ranjan Banerjee, a great speaker and a motivating professor of SP Jain Institute of Management and Research, Mumbai. Success stories going to be shared in a panel by icons like James Joseph, of the jackfruit fame person, the Shalini James of Mandra, the Joy Sebastian, the newsmaker of Manorama. That's going to be a panel which is going to share their success stories, and ending up with the valedictory session of the Student Management Convention by none other than Dr. Saji Gobirada YM Kozhikode. So this is going to be a very high profile management convention for our management students. Of course, other delegates are also welcome, which is going to be really, really attractive on 24th. And we have the ending of the KMA Management Week celebrations on 25th with the valedictory session with Mr. Ajay Prasad, Managing Director of Taurus India, addressing the delegates. And we may have one more speaker going to be confirmed. So it's a action-packed week from 19th to 25th. Please mark the dates and be there in the evenings with KMA. And all the notifications, email messages, WhatsApp messages will be coming to you very soon. So please keep watching and mark the dates to be with KMA. Thank you so much for that. And before we wind up, let me tell you that there is a special memento curated for Professor Vijay Kumar and of course the Professor Mr. V. Satyanarayanan, who are not part of the managing committee. So Vivek, we'll give you a handshake. The mementos are not virtual. It's going to be real. It's going to come to you. It's a proof of you being here today. The specially curated designed memento of KMA, which will come to you very soon by courier. Thank you so much. It was wonderful. And the idea which was mooted by our secretary, program committee chair, and Vivek clicked so well that we hit 200 at one point of time, but consolidated 195. It's indeed a very, very absorbing session, which was very eloquently, lucidly presented by the panelists. And thank you so much for being here. And thank you so much to all the delegates who have been there in large numbers, attending even now with more than 100 people present there. So, Jomon, I reserve those comments against you. There were people listening to my announcements as well. Thank you so much.